beyond market headlines. To understand the reasons for the day's movers and shakers. And get your portfolio ready for tomorrow. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Look at the Taiwan index managing to hold on to gains of 3.37%.
India is a key part of their overall global back to Starbucks plan.
And if you don't get it fixed fast, I'm going to fire your ass, okay?
Support which has moved higher and higher. I mean, basically the 20 days, being dragged higher.
Macquarie has upgraded the stock to outperform and target here is 6,793 per share.
A third higher on the Nifty, 26,100 passed on the Nifty.
Earnings were much better than the consensus. Don't compare YOY or quarter on quarter, but compare with the consensus, so it was far superior.
Honorable Supreme Court also said that we have not expressed any opinion against Sanman Capital.
The Nifty very close to the day's high right now. It's above the 26,100 mark.
For the first 9 months of the year, Nvidia has reported sales of close to $150 billion.
I think we should certainly grow between 6 to 7%. I think we have potential to grow beyond 7% as well.
Adani Enterprises has notified exchanges that its resolution plan received the highest number of votes from the COC, and lenders have now issued a letter of intent to the company as well.
That rally that we saw yesterday has continued. We are sitting with gains of 150 points. Nifty is above that 26,200 mark.
Good afternoon, hello, and welcome to this edition of Closing Bell. We're coming to you, as always, from the CNBC-TV18 Motilal Oswal studios. I'm Surabhi Upadhyay. With me is Nigel D'Souza. In the morning, I was asking Nigel, what's going to happen? 26,100. And he said, all-time high in November.
Yes.
Nifty's teasing, saying, Nigel, do you want it today or not? But it's astounding, right? We came, I think, just about 40 points away from that level. There's a lot of momentum in the market. Yeah. Let's see.
I think, Surabhi, even on 30th of October, you guys were talking about the all-time high, but I wasn't there. It didn't happen. I think either today or tomorrow, that all-time high is there. It's a matter of 50, 60 points or thereabouts, but it's a good performance, but you need to caveat it by saying that left-out feeling. Portfolios are not feeling like all-time highs. Stocks are still down 20, 30%. So the broader market participation needs to come about, but the good news is the banks, the heavyweights, Reliance Industries, they are taking the Nifty to all-time highs. So for the time being, the bulls will be happy that the headline index is going to those all-time highs. But the greatest satisfaction will come once the broader markets start participating.
Absolutely, I take that point. But and there's the slight wobble that started happening now. It's a very crucial 1 hour. So that Nifty chart that you just saw over there, where we're just off the highest level. This is the tally as it's looking like today. Reliance has been such a massive support for the market. Yeah, that's what I'm talking about. So just a bit of a wobble from the top and profit-taking setting in, which you can't blame anyone for, right? I mean, it's been a remarkable rally, a rally of almost 1,000 points from the lows of 25,300 thereabouts. So at highs, there is natural profit-taking. But remember, yesterday, the FPI numbers were positive. And what's heartening, Nigel, is that today, while the rest of the world is back, because this whole AI trade is back on after those NVIDIA numbers, but it's not like we've completely sold out, at least not as yet. But let's not jinx it. We still have one whole hour of trade. The bulls will want to take these gains home. They would want to end on a high, on a winning note. So plenty lined up. Let's actually just get that the Nifty composition chart back on to give you a sense of what's led. It's actually a pretty wide rally on the large cap screen, at least. Reliance obviously is playing a big part, but a lot of auto stocks have done well. iShares, by the way, is up about 3.5% as we speak. Some of the banks are chipping in quite nicely. So it's pretty well spread out, at least for the time being. We'll tell you more as we go along, and also mid caps and what the big newsmakers are looking like. But for the time being, let's tell you about today's show lineup. And as always, we have plenty coming your way over the next 1 hour. The Nifty is racing towards record highs. FMCG and auto stocks are leading from the front. Banks, relative underperformers in today's trade. We'll get you more on this and some trading ideas in just a bit. The Mahindra Group has laid down ambitious growth plans as it's at its Investor Day. It is aiming to become the world's fastest growing SUV brand. And it has also hiked its forecast for its tractor business. More coming up on this with Sudarshan in a bit. Hero MotoCorp's rally also continues after Macquarie upgrades the stock to an overweight rating. We'll tell you more about Hero Moto as we go along. And then views coming in from an exclusive conversation with Prashant Jain of 3P Investment Advisors. Prashant is raising a bit of a flag of caution on IPOs and new listings. That's a conversation that you don't want to miss in any case. Let's get started then. How should you position yourself for the remaining 55 odd minutes of trade? We've got Mitesh joining in. Mitesh, what a phenomenal rally it's been, right? But you can see the nervousness now. Some people are saying, bahut ho gaya, acha run, let's take the gains home and, go home. What would your advice be for the last hour?
I think from a trading point of view, the advice always is that, till the index itself tells you that I'm trying to go down, let's not preempt that. What traders can do possibly is trail the stock to about 26,080. That's where, we had seen some hourly closings first on the 23rd of October and then on the 29th of October. So as long as now we are above that, I think, believe that the trend is on the upside. Only a break below that would suggest that profit booking or some kind of corrective pullback has started. So that's one. Two, I think, when you approach all-time highs, yes, there's always this idea of taking profits. But looking at the indicators, I think, there still could be a chance of the markets catching up. So therefore, I think, keep a close watch on 26 to 8300 zones. Once we clear them, we are into all-time highs, which means that no historical resistance is there. And therefore, it could be very interesting on the upside. On the stock side, I have a buy on HDFC Bank, which I would recommend buying with the stop at 995 for the targets of 1030 to begin with. And Dabur is a buy with a stop at 519 for targets of 540.
Okay, all right. Thanks a lot for that, Mitesh. By the way, just pull up Physics Wala. The stock was down, I think, 13% or thereabouts. There's been a bit of a recovery from the lows. It had a blockbuster listing and then it lost its way a little bit. Physics Wala should come up for you on the screen. Suddenly, a big bounce, I think 123 to around 136. Plenty of volatility on these sort of counters. While Grow is still down. It's down more than 5%, I think, the last time I checked. So a couple of these debutants in focus in today's trading session, now down close to around 7.5%. But Mahindra Group's Investor Day is underway, and the company has set out some ambitious growth targets. The conglomerate targets organic growth of from 15 to around 40% across businesses till 2030. It aims to be the world's fastest growing SUV brand and the #1 LCV brand, and targets 5 times AUM growth in lending and a turnaround in Tech Mahindra by FY27. Sudarshan is now joining in to help us out with some key highlights out there. Sudarshan, you've been going through it. I saw you on the earlier show. I think you were talking about being a hero and dancing or something. I believe you've rehearsed your steps, so you could do the step first and then go ahead with the link, or vice versa.
So first I'll talk about Mahindra Group. It's holding the biggest ever Investor Day, where all the 12 group CEOs are participating. And ahead of the Investor Day, these group companies have released details on the exchanges, giving the very strong outlook over the next few years. So as a group, over FY22 to 25, the organic growth was 25%. Now going forward for FY26 to 30, now the target is in the range of 15% on the lower side, and on the upside, it's as high as 40%. Now coming to revenue outlook, where the group has given for 1 decade, that is from FY20 to FY30. For SUV and LCV, the growth target is 8 times. Tractor, 3 times. Truck and bus, which used to be earlier known as SML Isuzu, 6 times. And for Mahindra Last Mile Mobility, the growth target is 6 times. Coming to the market share, for LCV less than 3.5 tons, in FY25, market share was 51.7. Now, in FY26, it's seen rising to 54.1%. For SUV, in FY25, market share was 22.7%. That can increase to more than 26%, that is to 26.4%. For tractor outlook, the group companies have raised the outlook till FY30. So earlier, tractor industry outlook for FY25 to 30 was 7% CAGR. Now it's been increased to 9%, and demand would be raised by the company group is seeing demand for higher horsepower tractors, that is in the range of 40 to 50. They've also mentioned few aspirations. For SUV, they want to be world's fastest growing SUV brand. LCV, they want to be #1 brand across segments and applications. For tractor, they want to transform lives of farmers globally by democratizing technology. For truck and bus, they want to be amongst top 3 in India's ILCV trucks, that is basically school bus and truck, focused mainly in higher commercial vehicles. In EV, they want to be number one in eCV company with 1 million EVs on road by 2031. For M&M Finance, they want to be amongst most trusted financial services provider for Bharat. So it means they want to focus on rural area, and till FY30, they see 5 times AUM growth. For Tech Mahindra, turnaround is expected to be completed by FY27. On a similar trend, they have a huge target for Mahindra Holidays and Mahindra Life also. So big investor day and a big outlook by Mahindra Group.
And the dance step?
That's for tomorrow. I don't think Nifty is looking to hit the record high. It's back now. Again, we are around 70 points away from that level.
So you're promising us this. When we hit the record high, you're going to be doing a jig of your own.
We'll do together.
Absolutely.
I don't know what these boys are cooking up, but I'm really looking forward to it. I have no clue what's transpired between the two of them, but this is sounding very, very interesting. All right. So awaiting some excitement.
You can join in, Surbi. Don't feel left out.
I'll clap. I'll clap. Let the all-time high happen, and then the boys can take it away. All right. Let's actually, since we're talking M&M, let's also talk about Mahindra and Mahindra's holidays business. M&M, of course, spoke about that at the Investor Day as well. And we caught up with Manoj Bhatt, the MD and CEO of Mahindra Holidays, to learn more about the company's foray into the leisure hospitality business. They've just announced this investment of about 1,000 crore rupees. Listen in.
What gives you the right to win in that space, which is fairly competitive, and you already have large incumbents? What will be the key differentiator for you?
Thank you, Shireen. So as we looked at the market, clearly, the first part I would talk about is what we have built over the last 27, 28 years is this whole association with family and creating, almost defining family holidays in India. And as we looked at the broader space, we felt that there's a wide space there where nobody is focusing on in creating premium family holidays. And that's one of the space we want to occupy. And that actually combines some of the strengths we have historically. Secondly, of course, we are a very large chain. Today, we are number 3 in leisure hospitality by rooms. And so clearly, we have the expertise to actually scale up and run at scale. So that's the second point. And lastly, I do feel that experience is going to be the new currency. And if you look at experiential holidays, I think in a survey, 80% said that they would want an experiential holiday rather than a normal holiday. And as we think about that, if you look at what we do today, experience is embedded in what we do today also. So I think that's the third leverage which we want to bring into this business. I think scaling the core to 10,000 keys, I think that remains a big priority too. And as we think about it, I think whatever we have put as a decadal vision, it really translates to double the keys, double the revenues, and triple the profits from here on in the next 5 years. So I think that's the way we think about it, that we really have to focus on both of these. And of course, Signature Resorts is the new initiative. So obviously it will take a lot of time and attention, but scaling the core remains important.
Okay, let's go across to Deepak Shenoy, founder, Capital Mind, who joins us on the show. Hi, Deepak. A while since we spoke. What's the view on the group, Mahindra and Mahindra? You know, the Investor Day is on. The Mahindra Holidays top boss, so they're sounding extremely confident and optimistic. What's your take?
Yeah, overall, I think no, individual companies, I won't give any opinion here, Nigel. But I think specifically here we are talking about companies that is in many spaces. You know, like you said, there's in holidays, they're in they have a tech arm, they have many engineering arms apart from their core auto business, which itself is divided into personal vehicles, trucks, and tractors. So there is a fairly large diversification here, and pretty much an India story here, in the sense most of their work happens towards and selling in India for the most part, other than the Tech Mahindra business. I think overall, it's been one of the older groups in India that perhaps took a while to kind of come together. There's been some consolidation, some rejig within the group in the last decade. It's an interesting space for them to be, because they're not meaningfully yet in financial services and some of the other areas, but they have footprints in almost every industry, and it'll be interesting to see what plans they have going forward. They're probably now the second largest car or personal car manufacturing company in terms of size, in terms of number of vehicles sold, and they've caught up very quickly, especially in the higher end car space in India. So I think that's an interesting place for them to be. There are other things that they can do. They're doing a bunch of things in EV. They can do a bunch more things in two-wheelers, perhaps, and other things. Would like to wait to see where they're going. As a disclosure, we may own some of these companies in the group in our group businesses.
Okay. Fair point. Stay on. We'll just come back to you, Deepak. Lots more to discuss and talk about. But back to Sudarshan. He is watching out for Hero MotoCorp as well. It's reacting quite well to a brokerage upgrade that came through. Sud, fill us in.
So it's the third upgrade since Q2 earnings of Hero MotoCorp. That's basically in last 2 weeks, and the second upgrade in 2 days. And there are several reasons to. If you remember, after Q2 earnings, we were talking about that company has outperformed the peers on majority of the metrics. And if you take a look at the share price, it's up almost 50% this year. Now it's less than 200 points, or basically less than rupees 200 per share away from record high. It's crossed rupees 6,000 per share for the first time since September 2024. After JP Morgan's upgrade yesterday, today Macquarie has come out with a note. It has upgraded the stock to outperform, and target here is 6,793 per share. And the reason is, as per Macquarie, domestic market share has stabilized for the last few quarters and sees upside risks in both motorcycles and scooters, and that's basically being led by the new launches that company has been undertaking over the next few days. We also be seeing new launches in the 125cc segment by Maruti, and the another reason is the GST rate cut that company had government had announced in the month of September. That led to a big demand in the entry-level segment. Now the competition also in the entry-level segment, if you talk about 100cc, it has come down, because for TVS Motor and Bajaj Auto now 100cc segment is not of like huge importance. So competition is between majorly Honda and Hero MotoCorp. Now Street is willing to give higher multiples also. For the last few years, there is a huge discount in the multiples of Hero MotoCorp, and if you compare with the peers. So Catalyst, as per Macquarie, first market share gains that company is seeing in petrol segment. It has, in the festive season also, it has gained the market share, and in the market share is more than 31%, and the volume ramp up that company has been taking in electric two-wheeler. And on the margin front also, company has been performing consistently. This quarter also it was at multi-quarter high of almost 15%, and it maintains margin outlook in the range of 14 to 16%. So overall, it's a hero move by Hero MotoCorp after several years.
Okay. All right. So Hero MotoCorp indeed making hero moves. Almost 6,000 on the stock today. Deepak, so, let's sort of get a little broader. You mentioned overall thoughts on the M&M group and how well they've done. We actually had a discussion with Fada in the morning, because that's something that a lot of investors are thinking. Some of these auto stocks. Anyway, M&M has been a great wealth creator, even much prior to the GST cuts and all that. But let's say Maruti did so well this year, right? The question is that now that this whole bumper festive season is done, GST is done, is this sustainable demand? So can there be sustainable wealth creation from auto OEMs? Farah told us that their estimates for this year, total PV sales growth should be closer to 6.5%. What's your sense? Can one make good money out of auto stocks?
Well, I think if you look near term, things are going to be neither here nor there. But I think longer term, Surabhi, we actually should see a much better performance going forward. I'm talking about, maybe 1, 2, 3 years from now. There's a bunch of things happening that will probably help this. First of all, affordability. Now, GST cuts will make some of the more expensive cars definitely more affordable, but also change the affordability going forward as well, especially if there's an interest rate cut also that kind of comes down, because of lower inflation. And secondly, there is another layer which I think we're talking about. The space itself, I think is poised for an up move simply because there's been a long time after the insurance changes that came in, I think 2017 or 18, when even two-wheelers, the sales were have been stagnant for nearly 5 to 6 years. Many companies haven't even reached their capacities. And a lot of auto companies are still operating below 85% capacity, and that's why there's not so much plant expansions that are happening, capex expansions that are happening. I think I would say the next 2-3 years will involve capex expansions of a more reasonable sort, both from an EV perspective and some other format perspectives for these vehicles. There will be increased demand from tier 2 and tier 3, even for cars, I think, going forward, because the road networks are getting better. I think these will slowly push people, if they're moving into affordable territory, to buy cars instead of two-wheelers, or upgrade their two-wheelers into cars as well. And lastly, availability of electricity as it becomes more widespread. We are likely to see more acceptance of EV among even smaller towns. So these, I think, should give at least auto, which is one of the few areas where we actually have both domestic manufacturing and domestic demand to actually increase. So it's both make in India and make for India. I would say that's where I think the next decade we're going to see a lot more activity. However, I'd say some of these players are a little expensive, but by and large, many of them are in affordable territory right now in terms of prices versus their long-term growth rates. So we are positive in general on auto.
Positive on auto and positive on the market as well. Before we let you go, this broader sense, Nigel and I were counting down almost all-time highs, if not today, maybe tomorrow. What's the sense? What should one be doing at all-time highs in terms of sectors, what to look at, themes? IPO market is booming. Leave us with some advice.
I think two things. IPO markets booming is, I think, primarily because there's new supply coming into market that is already seeing a lot of inflows from domestic, both mutual funds and other places and so on. And relatively speaking, some of the foreign investor sales have come down or trickle down a little bit lesser than they used to be. So to that extent, when new opportunities come, people jump at it. But I would say be careful of valuations, especially for new companies, because you want to see them react in the public market space. You want to wait for them to at least do 1 quarter or 2 quarters of results so that you can see how the companies operate under larger public scrutiny, and therefore get yourself a better handle of things. I'd say India has been taking it on the chin for the last year, for the most part. All the new all-time highs on the Nifty. But if you look at the broad market, we still have a considerable number of stocks, nearly 40% or so, that are significantly more than 15-20% below their all-time highs. A lot of stocks still are trading below even their near-term moving averages. So you're seeing that price performance at a broad level is not anywhere close to what maybe the top level Nifty stocks are. I would say until that broad-based recovery comes, we're not really recovering. And for that, perhaps one of the triggers will be GST, maybe an India trade deal. They've been talking a lot about how they might ease up the rules for Indian businesses to be more productive. There have been maybe there's an interest rate cut in the offing. All of these will probably add to some kind of bullishness about India. And remember, we have grown earnings at a median basis more than 11-12% at a time when inflation is probably averaging 2%. So you have 10% real growth in companies' profits. And some of that has come on with the back of margin expansions. The next one will come on the back of capex and capacity expansions. So I think, if you have a 5-year or 6-year horizon, this is still a great time to invest. If you have a 2-month horizon, I'm not the right person to ask.
No, we weren't asking for 2 months at all. I think you've given us a fair framework to work with in terms of those who are looking at meaningful investments in the market. Thank you, Deepak, very much for that. Always great having you on the show. You have a good rest of the day. Well, we need to take a very quick break, come back on the other side, and then we'll get you excerpts of our conversation with Prashant Jain on the market as it's very close to hitting the all-time high mark on the index.
Welcome back. Looks like we'll have to wait till tomorrow for the fresh all-time highs. Markets have given up a little bit. Mid-cap index has moved into the red, and the number of stocks that are declining have overtaken the number of stocks that are advancing. But that said, plenty moving and shaking around. I'll tell you what. Hormoz is standing by. He's going to run us through all the stocks that are moving around. Hormoz.
The last 10-15 minutes have made this list go a little awry, and even if there are movers, they are not moving on very substantial volumes in today's session. But the ones that are, one that stands out is Aztec Life Sciences. We spoke about this in the morning, and since then it has extended its gains even more. 17% higher now on the stock. It's gained in 5 out of the last 6 sessions. The volumes in today's session for Aztec are the highest since February of 2010. The highest volumes in 15 years now for Aztec in today's session. 53 lakh shares have been traded today. The 20-day average is not even 40,000 shares. So in comparison to that, we have had 53 lakh shares traded. And despite such a move, the stock still remains below its key moving averages, but it's nearing a very important level, which is the 50-day moving average, which is at 739. So still 10 rupees away from those. And as a result of this move, the stock has turned positive for the month of November after 4 consecutive months of losses. The second one on the list today is Universal Cables, and this stock has had 8 straight days of gains. It's cooled off ever so slightly from the highs of the day, but in this 8-day gaining streak, the stock is up around 40%, and this is the third instance in this 8-day winning streak where we have had more than 10 lakh shares traded in a single session. Here too, we've had well over 13 lakh shares that have been traded. The 20-day average is just around 2 lakh shares, and the stock is up 19% so far in 2025, making it the 5th straight year of positive returns. Now, the one that stands out though today is IEX, and that is making a move on some volumes in today's session. 4.5% higher on the stock. It's the second straight day of gains after a 4-day losing streak. The volumes today are the highest in the month of November that the stock has seen so far. We have had more than 1.5 crore shares that have been traded today. The 20-day average is just over 50 lakh shares, so it's 3x of its 20-day average, and the stock has just managed to cross its 50-day moving average of 141. So crossing key levels and on high volumes is IEX.
Okay, all right, Hormoz, thanks very much as always for all the buzzers of the day. Now, as promised, let's get you some market perspective. We caught up with Prashant Jain, the founder and chief investment officer at 3P Investment Managers, to get his sense on the prospects of the Indian economy. Now, Prashant says that this is the most optimistic he has felt on India in the last 35 years. Listen in.
In my 35 years of this industry, I feel the most optimistic about the next decade at least. And there are 3 or 4 very simple reasons. One, I think post-COVID, as remote working has gained acceptance, non-software service exports have grown exponentially. And I think India has very little competition in that space. There is no country in the world which offers, as Nilesh said in his opening remarks, the largest pool of English-speaking people, technically qualified, digitally skilled, the ecosystem of services, and at our price points. So I think what has happened, India's current account deficit has collapsed because of this. I think we are also getting a second shot at manufacturing. We missed it the first time. I think we'll do better this time. Manufacturing is a much bigger opportunity, and we are making good progress in our areas of weakness. So 25% of Apple phones are being assembled in India, and we know companies are going public that are now suppliers to the largest aeroplane manufacturers in the world, the Apples of the world. So I feel pretty confident about manufacturing as well. And finally, I think the government has never played a more supportive role than what it is doing today. So net, I feel quite optimistic. I think we should certainly grow between 6 to 7%. I think we have potential to grow beyond 7% as well. I compare India with its own past, and I feel optimistic about that. And so, I think 6 to 7% should not be difficult, but I think we are capable of growing faster. In 2000, blue-collar salary in Mumbai was 4,000 rupees a month. A starting software engineer's salary was about 30,000 rupees a month, 8 times that. Today, the both have converged. There are far more blue-collared in India than white-collared. Only 25% of Indians earn a fixed wage. That number globally is 50 to 75%. So I feel very optimistic about the rising purchasing power of blue-collared workers.
Well, Prashant also commented on the impact of selling by foreign investors and believes that it is inconsequential in the face of the fresh money coming into the market. Also, listen into the segments of the market he is bullish on.
The biggest supply of stock is coming from the primary market. Foreign selling hardly matters now. I mean, you are getting what, 500,000 crores of fresh money into the markets every year, including mutual funds and other formats. And that is the supply of new stock. I mean, let foreigners sell 50,000 crores, 1 lakh crores, it's okay. It is 10-20% of the supply. And I think that supply of new stock moderates itself to the demand. So I would say if flow goes down, the supply of new stock would also go down. So I think these markets are in a low volatility, lower moderate kind of returns. See, I think what has happened is this has been a narrative-driven market because pre-COVID there were 3 crore demat accounts. Today there are 20 crore demat accounts. And these 17 crore new demat accounts, they have no history. They had no accounts in the stock market before 2020. In 2020, the small mid caps fell the maximum. They fell 70%. The large caps fell 40%. Economic sensitive sectors fell a lot, and most PSUs were in economic sensitive sectors. So whatever fell the hardest has given the maximum returns. So 7 out of 10 investors have experienced these high returns, and they are wrongly extrapolating that, in my opinion. So I feel these themes have got there is business merit in those themes, but I think investment merit is clearly missing. So in my mind, clearly it is large caps over small mid caps. And look at it, in Nifty stocks, there is no supply of fresh stock. All the supply is in non-Nifty stocks. So I think that also favors large caps outperforming. I like large banks, I like insurance, I like software also. I am not so negative. Pharma is good, automobiles is good. I would be very cautious on consumer staples, white goods, brown goods, companies, even retail companies. But even tobacco, telecom, oil and gas, utilities, these are also sensibly valued there.
And referring to that term liquid oxygen, Prashant mentioned that flows won't let the market fall and supply of paper will not let the market rise.
Last commentary, we described the current states of markets as a dialogue which is attributed to Ajit. I don't know which movie it is from. कि इसको liquid oxygen में डाल दो. Liquid इसको जीने नहीं, oxygen इसको मरने नहीं देगी और liquid इसको जीने नहीं देगा. So I think these markets are like that. The rapid demand of or flow of money to equities is not letting it go down, and the rapid supply, equally large supply of IPOs is not letting it go up. I feel that in majority of these issues, investors over long periods will lose money. The expectations are likely to be unmet because we are seeing many weak quality, average quality companies with suspect fundamentals or not so great fundamentals going public at crazy valuations. So I think in a lot of these issues, long-term expectations will be not met. At the same time, on the positive, I think from an economy's perspective, it is positive because all kinds of entrepreneurs, large, small, good, bad, I mean, everyone is getting lots and lots of money. Something similar has happened many times in the past. 92 was like this, 2000 was like this, 2007 was like this.
All not good examples.
So it is not happening for the first time. And I mean, I would again come back to the same thing that investors have to be very discerning in where they are participating. Long-term outcomes, I think, will be very disappointing. I feel a lot of companies will have very weak supervision over time. Because if you look at some of these companies, the Ps will sell out in next 1, 2, 3 years. The promoter stakes are split over few individuals and they are in low to mid single digits. They will also cash out. So will these companies, all of them professionally governed companies, ultimately as they turn out, will they be well managed or no? I think that is another issue that one should consider when one is participating in these markets.
We'll take a snappy break, come back. Dealing room chatter on the other side. Nimesh is waiting for you. Welcome back to Closing Bell. Well, as we speak, markets holding in the green. Nimesh standing by to tell us what he's picking up in D Street Chatter. Nimesh, we were almost there, but I think Friday to bante. What are you picking up in terms of flows?
Hi, Nigel. As we speak, the mid-cap index is almost in the red. So it's like a two-kind market, right? The Nifty heading towards an all-time high. But if you ask a portfolio investor or any investor or trader, they are sulking. That's not making money for them. So that's the kind of a market we are. The large caps driven Nifty rally is clearly visible in the last couple of days, but that's not clearly spilling down to the broader markets. I'll explain a bit of broader market underperformance as well. But technically, I highlighted yesterday as well. 26,120 is a level to watch, and above that, you've seen a bit of a short covering rally today. Remember, the Nifty, the FIs are still short Nifty, almost 88, 87%. So clearly, you will see further short covering rally if this, if this technical levels are sustained, and if market goes up from there. I guess the big trigger to watch will be the India-US tariff deal. There's a lot of chatter for the last couple of days. Given the Nifty move, there is a lot of hope. So need to see whether that comes out this weekend or before 27th of November. Flow again has turned slightly positive in the last couple of days. X of blocks as well. I'm getting a sense that there is a bit of buying interest back, especially in the large cap names. So Reliance is well bid. So is private bank stocks as well. And of course, IT in the last couple of days. Now coming to the underperformance in the broader markets, one of the technical reason is I understand one large FI seems to be merging with another fund. So they have close to 38, 40 holdings and all liquid large cap names, mid cap names in that portfolio. And there they are either selling out or doing blocks as well. So maybe that explains a bit of underperformance in the broader market. But this Nifty rally seems to be clearly led by large cap names and a bit of short covering as well.
Oh, yes, absolutely. And one can only hope if those flows really come back in a sustainable manner. Some trickle we've seen from the FPIs this week, but let's see if it really builds. What about stocks, Nimesh? What's on your radar today?
Well, so the first stock on my list is GMR Power. That's been buzzing in today's market, good volumes as well. I understand the company is likely to raise funds via preferential issue very soon. So that's something to watch out for. Some marquee HNIs, some large FIs are likely to put money in GMR Power pref issue. So that's the trigger there. The second stock is Bharat Forge. It has actually recovered this week from the recent lows and has done well as well. Largely, I understand the selling pressure from a leading long-only fund is largely over, and some bit of domestic buying has also emerged in Bharat Forge of late. The third stock is Polycab. It's marginally under pressure today, but I understand there are first rounds of selling from a leading domestic mutual fund in Polycab. Remember, the stock has done well of late, so a bit of profit booking from a domestic mutual fund there. The last one is Grasim. It's actually done nothing in the last few months, been consolidating. It was under pressure after that CEO exit. But at least a leading large HNI investor seems to be quite active and is accumulating Grasim at current levels.
Okay, all right. Got that, Nimesh. Thank you very much for all the details and all the buzz today from the street. Let's, however, now hop across to Nigel, figure out what's happening in the F&O market. Nigel, I guess the bulls will have to wait another day.
Well, that's right. It appears that's the scene, right? Because the Nifty, yes, it's holding up in the green. But today, actually, both the two batsmen that actually are supposed to lead it on the way up, they're underperforming. The tech index has, trading more or less flattish or thereabouts. And actually, if you look at that chart, the Nifty Bank as well is a relative underperformer. It's up only around 0.2%, while the Nifty is around 0.5% higher. Why have we moved up? Because two constituents actually of the Nifty, which are more than 20%, they have done very, very well. Fresh buying is what you're seeing on Reliance Industries. The stock is looking very, very strong. It made a 52-week high in today's trading session. And there's a big open interest built up out there as well. So fresh buying on Reliance Industries, fresh buying on HDFC Bank as well, has made up for the kind of underperformance that you're seeing from the other large few stocks on the Nifty pack itself. Moving to the options data, well, the Nifty PCR, that's holding at around 1.4 or thereabouts. And that's moving gradually towards the upper end of the range because the put writers, they're in the game. 26,100 put, well, the premium has come down to around 75 rupees. At the start of today's trading session, it was at around 160 rupees. The 26,200 put as well, the premium out there has come down to around 114 rupees, 110 rupees or thereabouts. At the start of today, it was around 215 rupees. So that's the kind of writing that we're seeing out there. At upper levels, it seems the call writing is now moving up. It's moved up to close to around the 26,250 call. The premium out there is at around 110 rupees or thereabouts. At the start of today, it was less than 55 rupees. So that's a big surge that is seen out there. A mix of activity. Those that bought yesterday, there was some buying, but today there is some writing that we're seeing at higher levels. In terms of individual stocks in focus, IEX, that stands out. A bit of a short covering bounce playing out on that one. I think tomorrow we'll be celebrating the fresh all-time highs. Back to you.
Okay, the bulls will definitely wait for that. They have waited long. So let's see if tomorrow we indeed get that. Amrish Balika joins us into the conversation. Amrish, good to have you in. What do you think? First, let's start with the easy question. All-time high, as early as maybe tomorrow, end the week in style?
Yeah, absolutely. In fact, for the last month and a half, I've been saying that possibly we should see a new high soon. But unfortunately, what's happening is just what you were discussing a while back. most of the portfolios are in the negative, basically because the mid cap and small caps are really sulking. I mean, markets, Nifty is going one way and the mid cap and small caps are going the different way. I just hope that once we see a new high, there could be some action back in the mid cap and the small caps, and we could see some amount of outperformance from there. And I think the trigger for all this should be that India-US treaty. So I think, I assume that should come by end of November, early December.
Sure. Okay, so let's get to your stock then. What do you have for us today?
Today's stock is Concor Container Corporation, which is a market leader in container terminal operator business with about 55% market share. And they operate about 66 terminals now. They have 17,500 wagons, 54,000 containers. They're increasing the capacity to about 70,000 containers and 100 terminals by 2028, which means upside scalability is decently high. And they've been increasing the value-added services like terminal handling and logistics solutions, which are margin accretive. The dedicated freight corridor is a big trigger for them, and this will fully be operational at JNPT by March 2026. I think this last connectivity is quite critical for Concor, and we should see that happening in the next 3 months. Q2 volumes grew about 11%. EBITDA margins were about 24.2%. And cement container transport, I think that's another big opportunity which I think Concor has grabbed. Overall, 13% revenue CAGR expected over the next 3 years. So EPS expectation for FY27 is about 23. And with this, my target price is 690.
Got it. All right, Ambrish, want to ask you a few more questions. For the time being, we'll take a short break, come back, continue our chat with Ambrish, and also we'll wind down the markets. Welcome back. Well, let's get back to Amrish Baliga. Amrish, any view on the alcohol stocks today? I noticed Radico actually was doing quite well. You have Tilaknagar as well as higher. Any view on these names? I'm just, wondering what's going to happen in Bihar. There's a prohibition that's in place out there, but the state finances are quite bad. I don't know whether or not they can take the bold decision because the women voters actually have supported the NDA in winning this election. That aside, what's the view on the alcohol stocks? What do you like?
Alcohol stocks like Tilaknagar, again, after that buyout, I think we should see much better sort of revenues and margins going ahead. So Tilaknagar, I think, should be bought even at the current levels.
Okay. All right. And any others? Would that be the pick from the pack or you're bullish on the theme?
No, that's the pick from the pack right now. Although overall on the space I'm bullish, but I think this is one pick which should give decent returns over the next at least 6 to 8 months.
Interesting. All right. What about some of these newly listed companies, Amrish? What's the view? Grow, stop growing? Lenskart, in fact, had a pretty decent listing for the kind of valuations that they did come in at. You had Physics Wala actually that's come off the top. And, the other one, Tenneco, a lot of interest, was up 20% yesterday. Today it's given back a little bit. Any view on any of these? Have you had a look?
I think most of them were decently expensive, whether you talk of Grow or Lenskart or even Physics Wala. I think the move which we saw in some of them, especially Grow, we saw nearly 100% sort of a move. I think that had to do more with technicals because of that low float. A lot of short squeeze that happened. We had seen a lot of auctions happening, because of which we had seen that move. But then once the anchor, investors start selling, possibly after a month, and at the same time, we should remember that they had placed a lot of shares in the private market to HNI investors. All through. I think the last deal which happened must have been about 134, 135 just before the IPO, and post that the IPO came at 100. So I think there could be a lot of selling coming in from, that space also, but that's going to take time because there's a 6-month lock-in for those investors. But then, end of the day, it's the valuation finally which will come to play, and that's quite expensive. So I see Grow again going back to those levels, possibly of 115, 120. I really don't see it worthwhile anything beyond that.
Okay. So need to perhaps watch this with some caution. Take that point, Amrish. NBFCs. Today, actually, a couple of these stocks are doing very well. Bajaj Finance is back up to 2.5%. M&M Finance surging this afternoon to 2.5% up as well. So what do you think of some of the frontline names on Shriram Finance? The market is still awaiting. Everyone keeps saying there may be a deal. So what would your pecking order, your preference order be if you want to add 2 to 3 NBFCs to the portfolio?
One is Bajaj Finance, clearly. Because of the way the consumption is going. We have seen post-September, the sort of a consumption boom. That's going to help most of these NBFCs, which are basically retail-focused. They would benefit quite a lot, at least for the next 1 or 2 quarters. So from that point of view, Bajaj surely should be on the buy list.
And Saman Capital?
I would possibly wait a while because there are those controversies. So I would wait a while before looking at that.
I think a couple of stocks, that deserve mention. You had Aztec Life. The stock is now up 20%. Bazooka move is what we're seeing out there. Anupam Rasayan, these stocks are just gaining, but they've taken a bit of a leg up. And I think Piramal Finance, that's a newly listed company. In all probability, tomorrow it comes out of the trade to trade, because that cool-off period is over. So I think that's the reason why that stock now is locked in upper circuit. And there are pending buy orders on Piramal Finance as well. Just thought we'll highlight a few of these names that are moving quite well. And from the tech pack, actually, eClerx is moving pretty well. It's moved up a little bit as well in the last few minutes. So not so bad, actually, though I've been saying that portfolios are not feeling like those all-time highs. Select stocks are doing a jig of their own. Well, Amrish, appreciate you joining in and giving us the thoughts. I think it's just around 90 seconds odd. So time to wind down the markets for today's trading session. The Nifty goes home with a gain of close to 150 points. No mean feat, pretty good. But getting into the final hour of trade, you thought that this was it, that we're going to be making those fresh all-time highs. However, that wasn't to be. HDFC Bank and Reliance Industries, those big boys, they did the heavy lifting in today's trading session. Both of them up close to around 1.5% and doing very, very well. Reliance in particular, well, that's the one that contributed the most to these 150 points on the upside. What is the problem then? The tech index, that was more or less flattish today, which is not bad after seeing a 3% gain in yesterday's trading session. Ended as flat as can be. And the Nifty Bank, that ended with a gain of only around 0.2%. From the broader markets, a lot of stocks actually were moving around. You had Tilaknagar Industries, that was up close to 3.5%. On large volumes, you had eClerx as well, that did pretty well. Aztec Life is another stock, that in fact did very, very well in today's trading session, was up 20%. Another one that's coming up on the list is UFO Movies, up 10%. Dredging was locked up 10% in the first few minutes of trade itself. And Anand Rathi shares as well, 6.5% up. So plenty of stocks should be. It did well in a market that was a little bit tepid actually, because the number of stocks declining still were more than the number of stocks advancing.
Absolutely. I mean, you do have a lot of those mid-cap high flyers, but on the losing side, must take in account the profit taking we've seen again on Grow. 8% down on Grow. Today, even PhysicsWallah came in for some selling. Orkla India, another recent listing, down about 4.5%. Some of these new listings cooling off. Hyundai Motor, Biocon, these were some of the other names. Nazara was down 4%. So these were some of the other names. Today's new listing, Fujiyama, by the way, has entered down 9% as well. So it wasn't a great day for the recent entrants on the street. Some caution in that side of the market. Well, the bell has gone, and that's where we take your leave on this edition of Closing Bell. But keep it with us, because Markets Forward will take the action ahead.